Good morning and welcome to our next webinar in our property owner webinar series. In this webinar, we're going to discuss just some basic information that new homeowners should know about the property tax system. And as we go through the webinar, if you have any questions, you can use the Q&A feature. At the end of the presentation, any questions that we haven't answered in the presentation, we'll go ahead and answer those for you then. So we will go ahead and get started. So the property tax system has three major players. And the first player in that property tax system is the appraisal district, which is our office, the Travis Central Appraisal District. And our job as an appraisal district is to determine the market value of all properties within Travis County. And we do this each year, and the determination of market value is as of January 1st. We then send out a notice of appraised value, handle any protests regarding the market value of those properties, and then administer all exemptions and tax deferral applications. The second player in the property tax system are the taxing units, which are your cities, your school districts, the county, emergency service districts, MUDs, and water districts. And the taxing units set their budgets to provide services to their property owners and citizens within their taxing unit. They also set their tax rate, and that is what determines your overall tax burden. And then the final player in the property tax system is the tax office. And the tax office calculates and mails property tax bills and collects property tax payments. They also handle vehicle registrations, license plates, voter registration, placards for people with disabilities, alcohol and beverage permits, and then they also handle court costs that are associated with the Travis County judicial system. There are some pretty important dates that new property owners should know as part of the property tax calendar. The first is January 1st, which is the assessment date. And essentially what that means is the appraisal district appraises your property at its market value as of January 1st. So what it would have sold for on January 1st of that year. April 1st is another important date. The appraisal district starts sending out notices of appraised value around April 1st. This process can take several weeks, and because of the large volume, they're sent out in batches, but we start sending those notices on April 1st. May 15th is the general deadline for protesting the market value of your property. July 25th is the date that the appraisal district has to certify the appraisal roll. And the chief appraiser, Maria Krigler for Travis County's appraisal district, she sends the certified appraisal roll to each taxing unit within Travis County. Then those taxing units use that information to set their tax rates, which they do in August and September. Then in October, once the tax rates are set and budgets are set, the tax office starts sending out tax bills to property owners. November is the date for voter approval elections. There are some provisions that require taxing units to get voter approval for tax rates that they may want to set. And those are always held in November with the general election. And then on January 31st of the following year, property tax payments are due. So after January 31st, the tax becomes a delinquent tax bill if it hasn't been paid. So you want to make sure that you make your property tax payment by January 31st. In calculating your property taxes, there are three factors that determine the total amount of taxes that may be imposed on your property. So the first is the appraised value, which is established by the appraisal district or office. The second factor is any exemptions that you might be entitled to, and exemptions are also administered by the appraisal district. And then the third factor is the tax rate, which is set by those taxing units, your city, county, school districts. And the purpose of the appraisal of your property is not to determine how much property taxes you will pay, but to allocate that tax burden fairly amongst all property owners. And there are three different types of values that the appraisal district determines. First is the market value, which is what your property would sell for on that assessment date, January 1st. And this is based on what's happening in the market. So we're reporting just market factors. We look at properties that have sold that are similar to your property and estimate what your property might sell for based on those sales. The market value, again, is just a reflection of the market. So there's no limitation on the market value. The second value is the assessed value. And the assessed value is for properties that have exemptions, homestead exemptions in particular. And the homestead exemption provides many benefits to property owners, but one of those benefits is a limitation on the assessed value and how much it can increase each year. So for properties with a homestead exemption, the assessed value is a calculation, and it's mandated by law, by the tax code. And it's just last year's assessed value plus 10% or the current market value, whichever is lower. And in our Austin market, our housing has been appreciating so fast and for so many years that it's pretty rare that the current market value would be lower than your assessed value. So most property owners that have a homestead exemption see that assessed value that is lower than the market value. And again, that's just a calculation, 10%, last year's assessed value plus 10% or market value, whichever is lower. The third value that is determined by the appraisal district is the taxable value of a property. And this is the assessed value minus any exemptions. And it's the amount, the value that's actually used to determine how much you'll pay in taxes. The amount of exemptions that you might be entitled to can vary from taxing unit to taxing unit. Each taxing unit gets to set the exemptions that and the amount that they want to offer. And we'll talk about exemptions a little bit later. So appraisal districts are required by the Constitution and state law to appraise properties at 100% of market value. And that is what they would sell for on January 1 of that year. If the house is only 50% complete on January 1st, then we would only appraise it at 50%. If the house is there on January 1st, but then it gets torn down in July, you would pay taxes on the house as of January 1st. And since it was there on January 1st, you would pay taxes on that property. Appraisal districts use sales of similar properties in your neighborhood to estimate what the market value of your property is. And some of the key components that we look at when we're determining market value are the size and type of the improvement on the property. And an improvement is just the structure that's affixed to the land. So a single family residence or a duplex, a condo, a townhouse. We also look at how large it is. So is it a small bungalow or is it a mansion? We look at what construction materials were used, the quality and condition of the house. Is it a house with all siding? Is it all brick? Did it use really high-end materials when it was built? Was it maintained well? We also look at the site characteristics. So how large the lot is, if you have a swimming pool, and any other factors that might increase the value of the land. So the specific characteristics of your property are available on our website. We'll talk in a little bit about how to find that information on our website. But any information that we use in valuing your property and setting our models is available on our website for you to review. So exemptions, like I said earlier, exemptions can lower the taxable value of your property, resulting in a lower tax bill. So if you recall, the appraisal district determines the market value of each property. Then there's a calculation of the assessed value, which is last year's assessed value plus 10% or the current market value, whichever is lower. And then your assessed value minus any exemptions you might qualify for is the taxable value and the value that you'll pay taxes on. And exemptions are a great tool that property owners have that can lower their tax liability. There are many different types of exemptions. We'll cover a few of the more common ones. The most common is the homestead exemption. And the homestead exemption is broken down into a couple different types of exemptions. The first is the general residence homestead exemption. And most property owners that own and occupy their property as their principal place of residence can qualify for this general residence homestead exemption. And it provides an exemption off of that assessed value, so it lowers your taxable value. And then on top of the general residence homestead exemption, some property owners may also qualify for other exemptions. The most common of those is the over age 65 exemption or the disabled person exemption. And again, these are on top of the general residence homestead exemption. So if you're over the age of 65 or are the surviving spouse of someone over the age of 65 or a disabled person, there's additional exemptions that you can qualify for. The biggest benefit of that over 65 or disabled person exemption is it freezes your school taxes. So in the year that you turn 65, you won't pay more in school taxes than that year. It freezes that amount for years moving forward. So for the over 65 and disabled persons, you can claim one or the other, but not both. And for most of our Travis County taxing units, they offer the exact same exemption for the over 65 and disabled persons. But again, you have to choose one or the other, not both. There are a couple other exemptions that are available for individuals with specific conditions. There is a 100% disabled veteran exemption. And this exemption is for veterans who are 100% disabled with a service-connected disability, and that's determined by the Department of Veterans Affairs. And property owners with this exemption get a 100% exemption off their property taxes. There are also exemptions for the surviving spouse of an armed services member who's killed in action and the surviving spouse of a first responder that's killed in the line of duty. And these are both a full exemption, 100% of your property taxes. Okay, so generally for your homestead exemption, if you own and occupy the property as of January 1st of that year, you would qualify for the exemption. There are some exceptions that would allow you to apply early for the exemption or apply late. But in general, if you own and occupy the property on January 1st, then you would qualify for the exemption. And for new homeowners, you get a lot of mail right when you move into your house and a lot of solicitations, and you'll receive some solicitations for filing homestead exemptions for you, and they'll charge you a minimal fee. We just want you to know that filing a homestead exemption with the appraisal district is free. We have many options on ways you can apply for that exemption. We can accept an application by mail. We have online portals that make it really simple to fill out that application and submit that online. So if you get a solicitation to pay for someone to file your homestead exemption, just throw it in the trash. It's easy to do on your own. You can file it directly with the appraisal district for free. For anyone who acquires their home after January 1st, you may be eligible to apply for your homestead exemption early. There are a few conditions that have to be met in order for you to file early. The first is that the property doesn't have an exemption on it as of January 1st. So meaning the prior owner or the person that sold you the house didn't have a homestead exemption. And this is really for the buyers, the new homeowners benefit. So when you purchase a home that has a homestead exemption on the property already, you get to inherit that exemption and receive that benefit of the prior owner. So it's to your benefit, if it has a homestead exemption, to leave that prior owner's exemption on your account until the following year. If you qualify for an early exemption because there's not an exemption on the property from the previous owner, then the exemption is prorated based on the date that you qualify for the exemption. So the date that you own and occupy the property. Again, you must own and occupy it as your principal residence. And for example, a lot of people in Austin right now are purchasing homes and renovating houses or knocking the structure down completely and building a new house. So if you purchase your property in March and you renovate the property and you finish your renovations in July and you move in, you would qualify for the exemption in July when you start occupying the residence. In addition to the application for the exemption, there are other supporting documents that have to be supplied to the appraisal district in order for us to grant the exemption. So for the general residence homestead exemption, you have to also provide us with a copy of your driver's license or ID card. And this has to be a Texas driver's license or a Texas ID card. By law, we can't accept any other form of identification. We can't take a passport or a concealed carry license. It has to be a Texas ID card, Texas driver's license or ID card. And also one of the main things we see with denied applications is that the address on your driver's license has to match the property address. So when you move in, you've got a lot going on with your new property. Sometimes we forget to update our driver's license. So make sure when you purchase your home and you move, get that driver's license updated. And as soon as you get that updated, you can submit the homestead application to us. But the driver's license address has to match the property address that you're asking for the exemption on. For the disabled persons exemption, you'll need to submit your SSI disability letter from the Social Security Administration. For the disabled veterans exemption, we need the letter from the VA, the Veterans Administration, showing the disability percentage. For surviving spouses of armed services members or first responders killed in action, there's a letter from the employee retirement system that needs to be submitted with the application. And generally, you only need to apply for an exemption once. So once you apply and you're granted the exemption, you don't need to apply again. There are occasions where we audit our exemption records and we may ask you to reapply for the exemption. And this is just to ensure that you're still entitled to the exemption. The most common scenario that we see when we ask you to reapply is if a new deed is filed on your property. And this happens a lot with estate planning. People put a property into a trust, and so the deed is filed with that trust name. It also happens when you remove a spouse because of a divorce, or you add a spouse to the deed because you got married. For the appraisal district, many times there's no way for us to know that that new deed is really the previous owners. The ownership hasn't changed. So if these scenarios apply to you, reach out to us, let us know. We can reinstate that exemption and make sure you don't lose any of that benefit. So you're ready to file for your exemption. How do you do that? Our website, which is www.traviscad.org, has a lot of information on homestead exemptions, how to file. There's also a copy of the form that you can print and mail to us. But we have a really easy online portal that allows you to submit your homestead application and that driver's license or any supporting documentation online. And this is the fastest way to get your homestead application processed. We also have frequently asked questions on the exemptions page that can be helpful when you're applying for your exemption. And we have an exemption hotline helpline that we have staff available to answer any questions you might have. And that number is 512-873-1560. The other major task that the appraisal district completes each year is the mailing of the notice of appraised value. And again, we send these out starting in April of each year. And you will either receive a formal notice that looks like the picture on the right, or a postcard. And so if your property's value doesn't increase $1,000, so it doesn't change or it increases a nominal amount, you'll get a postcard in the mail. If your value increases more than $1,000, then you'll get a formal notice from us. If you do not receive your notice of appraised value by mid to late April, check our website. We've all experienced the delays that USPS has been experiencing. So we put a PDF copy of your notice on our property search so that you can download it and have that information. And your notice of appraised value will list your market value and as well as the assessed value of your property. And these two, again, can be different if you have a homestead exemption. Oftentimes that assessed value is lower than your market value. We will also list each taxing unit that your property is part of, each exemption that you've been granted, and the amount of the exemption that each taxing unit has given. So the notice of appraised value is another place you can check to make sure you're getting the benefits that you're entitled to. You can also protest your property value if you would disagree with the market value. There is a protest form that we include with your notice of appraised value, but we also have online options, and it makes it really simple to file your protest online. You often will get a quicker resolution if you file online. So it's important to remember that you're protesting the market value of your property, not your property's taxes. The market value is the only thing that the appraisal district has control over. So we determine the market value, the assessed value, and the taxable value are both calculations. So if you're protesting your property, you're protesting the market value. And remember that the property taxes are determined by the tax rates and the budgets, and we'll talk a little bit more about that shortly. The deadline to file a protest is May 15th, or 30 days after your notice is mailed. Your protest deadline will be listed on your notice of appraised value, so you know the exact date that that protest is due back to us. And remember, your assessed value on that is the 10% limitation. So last year's value plus 10%, or the current market value, which is lower, and you're protesting the market value. Even if you're successful in your protest, the property's market value may change. You may get that reduced, but your property's assessed value might not change. A lot of homeowners with homestead exemptions right now, the market has increased so substantially in past years that they're playing catch up. So they've had that 10% increase each year, and it's been limited. So their market value is much higher than their assessed value. So you would have to get to protest and see property value reduction. You would have to get that market value beneath your assessed value. You can settle the protest with by meeting with one of our staff members and a TCAT appraiser. If you don't reach an agreement in your informal meeting, you're entitled to a formal hearing with the Appraisal Review Board. And the Appraisal Review Board, or the ARB, is an independent body. They're separate from the appraisal district. They are not appraisal district employees, and the appraisal district doesn't have any influence over the ARB members or the decisions they make. So the ARB members are appointed by the local administrative judge, and their sole job is to hear evidence presented from property owners and the evidence from the appraisal district and reach a decision on that protest. And our website has a lot of valuable information. And again, our website is www.traviscad.org, traviscad.org. You can do a property search on our website and look up your property specific information. You can get a copy of that PDF copy of that notice of appraised value. You can get online forms and applications that you might need. We also have online portals available to file exemption applications and file your protests online. We have recordings of webinars like this webinar on our website and frequently asked questions. We also have a customer service chat. That's a great resource to get if you have a quick question, to get a quick response from our staff members. So again, our website's www.traviscad.org. So we've talked about the first player in the property tax system, the appraisal district. Another player in the property tax system is the taxing units. And each taxing unit determines the budget necessary to provide the services that their constituents are requiring. They also set the tax rate that's necessary to meet those budgetary needs. So while changes in the property value may affect your tax bill, they don't always determine necessarily an increase or a decrease in the amount of taxes you'll pay. The appraisal and your property tax bill is solely determined by the taxing units and the tax rate that gets set. So we like to think of this as a pie. So the role of the appraisal district is just to ensure everyone pays their fair share. So if you think about property taxes as a pie, how big or small the pie is determined by the taxing unit. The taxing unit, if it has a large budget, it's going to be a large pie. If it has a small budget, it'll be a small pie. The appraisal district just slices that pie so that everyone pays the fair amount and they get that fair amount of the property tax burden. But the overall size of the pie, or how much everyone will pay in property taxes, is determined by the taxing units and the budgets and tax rates that get set. There is a website, it's travistaxes.com, and you can enter your property specific address and see each taxing unit that assesses a tax on your property. And you can see what their proposed tax rate is, what their no new revenue rate is, what the voter approval rate is. And you can also see when their budget hearings are. You can provide feedback to them. And this is a really important role for citizens of the community. Get involved in those budget processes. Tell your elected officials what's important to you, what services you want, which services you don't think are as important. And that can all be found on that travistaxes.com website. And I mentioned briefly the no new revenue rate. This rate is calculated by each taxing unit. So when the chief appraiser certifies the appraisal roll to the taxing units by July 25th, the first thing the taxing unit has to do is calculate the no new revenue rate. And this is the tax rate that the taxing unit needs to generate the exact same amount of revenue as they got the year before. So it takes the current year's values, but gives them the exact same amount of money. And if appraised values go up, the no new revenue rate goes down, and vice versa. If appraised values go down, the no new revenue rate goes up. Because again, the tax rate, this is just the rate that would give them the same amount of money. We like to consider this like a reset button. It's the starting point. So once values are set, that reset button's hit, and there's a no new revenue rate that gives them the exact same amount of money that they received the year before. Another rate that each taxing unit calculates is the voter approval tax rate. There are some limitations that have been set by the Texas legislature on the tax rate or the revenue side of the property tax equation. The voter approval rate is the tax rate that, if it's exceeded, it would require a vote from the taxing unit constituents to approve that tax rate. And again, those are held in the November general elections. For cities and counties, they can increase their tax rate 3.5% without requiring a vote from citizens. Anything above that 3.5% would require a vote in the general election. For junior college districts, hospital districts, and any other special units, they can increase their tax rate up to 8%. And then school districts, there's a calculation based on their debt tax rate and how much state funding they receive. It's a pretty complex calculation. A general rule of thumb would be 2.5% for school districts. But again, there's a lot of factors that play into that. And again, travistaxes.com can provide you more information on that no new revenue rate and the voter approval rate for each taxing unit. If the taxing unit is adopting a tax rate that is above the no new revenue rate, they are increasing your taxes. So remember, the no new revenue rate is a reset button, gives them the exact same amount of money as they received last year. So anything above that no new revenue rate is an increase in your taxes. After the tax rates are set, your tax bill will be mailed to you from the Travis County Tax Office. This is the third player in that property tax system. Remember earlier, we discussed the different values that are set by the appraisal district, and the taxable value was the assessed value less any exemptions that you were entitled to. And the taxable value is what is used to determine how much property tax you will pay to each taxing unit. And a lot of people confuse the 10% homestead limitation with tax bill increases. And the homestead limitation is on the value side. The assessed value on a homestead property can't increase more than the 10%. However, this limitation doesn't apply to your tax bill. There are limitations that we just discussed on the tax rate or the revenue side, but the 10% limitation is on the value for homestead properties. Your tax bill could increase more than 10% if, say, the voters approve a bond for a taxing entity, or they approve that a rate higher than that voter approval rate. Then your tax bill could increase more than the 10%. And that's why it's so important to be involved in local government. Let your elected officials know what budget items are important to you. If that bond is important to you, let them know that. Another misconception is with the over 65 exemption. And we briefly spoke about this earlier, but probably the best benefit of the over 65 exemption is that it freezes the taxes you pay for your school district. So those won't increase the year that you turn 65. It freezes that tax amount for your school district. And again, this is just your school district and your Austin Community College taxes. It doesn't freeze your city, school, city, county, or emergency service districts. One of the most common things that we see that really surprises new homeowners is with exemptions in selling of or purchasing a home. So in this example, we're going to use Jack and Jill. So Jack and Jill have owned their home for 30 years. Jack is a disabled veteran, and both Jack and Jill are over the age of 65. So they have that tax ceiling for their school taxes. They pay $2,000 a year in property taxes. In 2021, Jack and Jill sold their home to John and Jane. And John and Jane are young, they're first-time home buyers. And when they closed on their house, they put $1,500 towards the tax bill for that year. That's usually done at your closing through an escrow account. Then in 2022, they were shocked to find that their tax bill had gone up to $8,000. So John and Jane were basing their expectations based on the tax bill they inherited from the prior owners, Jack and Jill. Jack and Jill were over 65. They had a tax ceiling on their school district taxes. And when they sold the property, the next year, that tax ceiling goes away. Since John and Jane they weren't over 65, they won't qualify for that tax ceiling. So new homeowners are often surprised by the potentially large increase in property taxes. Title companies often don't research what exemptions the previous owners might have, and they typically don't explain this to buyers in that closing process. We recommend you do your own research, base your estimate for property taxes on the price that you're paying for your home, and look at those exemptions that the prior owner might be entitled to that you wouldn't be. So we're going to go over a couple common misconceptions. So the first common misconception, again, is that your property taxes can only increase 10% a year. And this is false. Again, the homestead limitation is on your assessed value. So the value side of the equation, not your property taxes. So your property tax bill may increase more than 10% if voters approve a bond or they approve a rate higher than the voter approval rate. Another common misconception is that it is illegal for appraisal districts to know how much I sold my property for or I bought my property for. This is false. You'll hear a lot, Texas is a non-disclosure state. And we are a non-disclosure state, but all that means is that when a sale or a transaction takes place in Texas, the appraisal district isn't automatically sent the sale data for that transaction. We are mandated by law to appraise property at 100% of market value. And so in order to do that, we have to research and get sales prices of transactions that take place. So it is not illegal for the appraisal district to know how much you sold your property for or bought your property for. That's false. Another misconception is that appraisal districts raise property values to raise money for taxing entities. And this is false. By law, appraisal districts, again, must appraise property at 100% of market value as of January 1st. And a lot of people are unaware, but appraisal districts are actually audited and tested regularly to ensure that our values are accurate. The comptroller's office comes in and they study not only our values to make sure we're at 100% of market value, but they also study and look at our appraisal methodology and our practices to make sure we're using appropriate methods. Another misconception is that the appraisal district raised my property value and the taxing unit kept their tax rate the same. So the appraisal district increased my taxes. And again, this is false. We talked about that no new revenue rate, which is the rate that kind of resets and gives them the same amount of revenue as last year. Taxing units get that same amount of revenue. So if a taxing unit adopts a tax rate that's higher than the no new revenue rate, even if it's the same tax rate from last year, the taxing unit has increased your taxes, not the appraisal district. We have a property owner toolkit available on our website. And again, that's traviscad.org/toolkit. And it includes an introduction to the property tax system, information on homestead exemptions, and a look at the property tax calendar with some of those important dates that we covered earlier. And our next webinar in our property owner webinar series will be on Thursday, April 13th at 11:30 a.m. And we'll cover the notice of appraised value and understanding some of the items that are included on that notice. So we hope you can join us for that webinar. You can find more information on the webinars and register for that webinar at traviscad.org/webinars. And with that, we'll go ahead and look at some of the questions. So the first question is, what is the sales survey that I received in the mail from TCAD? Am I required to return it? And how does the survey result affect the appraised value? So every year we get sales transactions and we send out a survey to all buyers of property. You can report to us what the value of your property was that you just purchased. More than likely, like I said, we have to do a lot of research to get the sales price. So we probably already have it, but if you want to send that survey in, make sure we have the right value so you don't get a higher value than what you paid. The best evidence of market value, which is what we're trying to get to, is a sales price. Okay, the market has been so volatile. We saw a rapid market increase over the last 2 years, but now the market is cooling off due to interest rates and homes are sitting on the market longer. How is that being calculated and taking into consideration? So again, we appraise 100% of market value as of January 1st. So many people have seen significant increases in their property values over the last 3 years. If the market does decline or kind of stabilizes, we reflect what the market is doing. One thing that kind of catches people off guard is that if your assessed value, you've been seeing a 10% increase every year because your market value increased 50 or 60%, your assessed value is still going to be lower, may still be lower than the market value of your property, even in a cooled down market. So you're still going to see an increase in that assessed value until you catch up to the market value. Can a sales contract be enough supporting documents to bring down the appraised value if contesting the assessed value? We don't use sales contracts, but you can give us your settlement statement and we will, again, the best evidence of market value is the sales price. So if you can give us that settlement statement, we will reduce the value to the sales price. Okay, this is a great question. We applied for homestead exemption this year, but qualified for it half of last year since we moved into a new home. Since the property tax was already paid before the homestead exemption was applied, will we get a partial refund of the property tax after the recalculated property taxes for the prior year? So this has to do with that ability to apply early for a homestead exemption. If there is not a homestead exemption on the property the prior year and you move in, for example, in August, you would get the prorated exemption amount. So the amount that's exempted off the property for school districts, for example, is $40,000. You would get a prorated amount of that exemption, but your base cap year would be January 1 of the first year you own it. So if there is any refund due, refunds are processed by the tax office. You could call them and ask questions of that, but you would be entitled to a refund. Okay, are comparables based on sold price by market value, assessed value, or other? So when we're appraising property at market value, we're looking at comparables of market value transactions. Is taxable value the same as net appraised? So on our website, you'll see the term net appraised used, and yes, those are can be used in conjunction. Are you able to provide the property sale information online electronically instead of via snail mail? Yes, you can. I'm assuming you're referring to the sales survey and providing that to us. So that can be emailed. Our customer service group's email is csinfo@tcadcentral.org. So you can email that into them. Can you retroactively apply for homesteads, and do you reimburse based on value of when homesteads should have been activated? So you can apply for a homestead exemption up to 2 years after you qualify for the exemption. Any refund, again, is from the tax office, but they do process. And so that exemption amount would be taken into account for the prior years that you qualified for, and a refund would be given. I have a mortgage. Will I get the 2023 notice of appraised value or my lender? That's on a case-by-case basis. Some lenders put their mailing address as the property owner's mailing address so that they get those important notices from us. But again, our notices of appraised value will be on our website starting in April, mid to late April. So you can download a copy from there even if you don't receive it in the mail. And I think that is all of our questions. So again, we thank you for attending our webinar, and we look forward to seeing you at the next one. Thank you.